Yo, 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 and welcome to this edition of Owl Eyez on BASE Defi, episode 3. Guys, just as we are getting started, if you could show some love and retweet, let your friends know where you are, because we are going to be unpacking some DeFi yield strategies and follow along this $1,000 journey I'm going on as a DeFi novice with my man, Crypto Noah, who is a savant and actually runs his own academy, teaching people these strategies and helping people navigate the DeFi realm in 2025. So without any further ado, Crypto Noah, how are you this fine day?
Oh man, never better, man. Any better, I have a halo around my head. The week was good. You know, I got on my 1-inch shirt since we might be hopping in a 1-inch pool. I got my this is from ETH Denver 2023. It's a classic right here.
Man, that's a sweet throwback.
Yes, sir. But yeah, man, all is well, man. How you doing, man? What you rocking?
I'm doing well. Today was kiddo's first day of school. We survived the summer, so it's like, yes, let's go. It's funny how when you're a kid, just summer holidays just fly by, and when you're a parent, it's just like, oh, how many weeks are left, and then it's finally the day. So I managed to catch up on a bunch of stuff. Finally got my hair cut, and yes, today I am rocking Film 3 from this was from the Film 3 festival, the Sunday capping off the On-Chain Summit. So this is a fresh addition to the wardrobe. But yeah, here to represent.
Let's get it, man. Let's get it. Well, I know we got a lot of stuff to chat about today. We're gonna talk about ZORA. We're gonna revisit the pools that we've been doing for our case study, our ZORA ETH and our ZORA USDC. I believe you were in 3 of them. And then my good brother has another pool that he wants to show me today. We're gonna get my thoughts on and possibly hop in and get some really, really nice yield. So you ready to hop in, man?
Absolutely. Okay, so let's start things off, I guess, with the deck screener.
Well, first, let's talk about ZORA, because normally one of our rules, failure to plan is a plan to fail. One of the most important things when you're providing liquidity is to never provide liquidity for any asset that you wouldn't hold on its own, because impermanent loss, like as you guys saw, he went out of range. I forget which direction he went out of range. I think ZORA was underperforming ETH. He was in 100% ZORA. So like a lot of times, like if I show you the Yield Hunter tool that we have, like let me actually just show my screen right now. A lot of times you go on here, like, yeah, the first one is fuck you in ETH. I'm not sure what fuck you is, but the APR right now is 49,000%, right? Now, a lot of people will look at that and be like, oh man, I can make X and Y percent per day. But it's just like, it's kind of going back to, you remember the whole node craze a few years back in 2021 when everyone was doing all that node stuff and they were accumulating tokens, and then everything they accumulated kind of went to zero.
Mm-hmm.
You kind of have to worry about, that's a single side staking issue because you only have exposure to the nodes, but they're locked up. But when you're providing liquidity, like, for example, let's say ZORA was some kind of bullshit token, which is not. We're going to dive into it. If it went out of range and it went to zero, not only did he lose his ZORA, but the smart contract, when you go out of range, it's going to limit order by the loser. So if ZORA goes to zero, not only is he going to lose all his ZORA, but his ETH is going to buy ZORA, and then it goes to zero. So you never want to provide liquidity for any asset that you're not holding on its own, right? So we kind of wanted to just talk about ZORA. Let me actually come back to screen. And before I do, I kind of want to talk about why I'm super bullish on ZORA. If you guys want to get like a full fundamental analysis on ZORA, just go to Crypto Noah on YouTube. And I just put out a ZORA fundamental analysis yesterday, but I shared it with my community like a couple of days before. That's one of the perks of being a part of our community. Like in this video, I went through the white paper, I went through what problem they're solving, went through the tokenomics, went through the team. So we're just going to give you a high level of all of that stuff. So this is the most important thing. Like, I'm sure you guys have heard of like the differences between Web 1, Web 2, and Web 3. If you haven't, you know, you have read, write, and then read, write ownership. Now, in the beginning of the internet, you were just able to read text, like read forums. Like if you just think about, what is it, Reddit, that's how the beginning of the internet looked, right? It was before my time. I was around, but I wasn't really on the internet. But you can just go through and read stuff, okay? And then Web 2 was read write. So instead of just being able to read stuff, you can actually produce content. And this is when blogging came about. And then we had our social medias. We had MySpace. We had, Facebook, Instagram, Snapchat, Tumblr, if y'all remember. If y'all was really in the trenches, there was another one called Black Planet. I'm not sure if you were on that one, but I remember my sister helped me set up my Black Planet. Extremely ghetto. And then, so that was read write, and now we're moving to read write ownership, right? And I think ZORA is really helping to spearhead the initiative of what I like to call the value age, right? So with read write ownership, you get to own the content that you have. I'll always say, if the platform that you're using is free to use, that means you're the product, right? You all heard the saying that data is worth more than oil nowadays. So all the stuff that you search, all the videos you like anything that you consume, they're tracking all of that data. And now, like if you're a person that's into, hiking, running, eating, when they have advertisers come to pay the platform, they have all of your stuff that you like indexed so that they can use you for targeting. Like they're making money off of you while using it for free. So that's how you're the product. ZORA kind of flips that on its head, as they allow you to essentially tokenize your brand. And ZORA is built on the OP superchain. They call it the superchain because Uniswap's Unichain is built on it. BASE is built on OP. Kraken's Ink chain is built on the superchain, right? They allow you to tokenize your brand. So basically, when you sign up with ZORA, follow both of us. Yours is Basejunkie, mine is Crypto Noah. We also have a ZORA profile on Know It Owls. But you can basically, as soon as you go on there, you launch your token, right? Your token is whatever your name is. And then people can buy your token. And the cool thing is, you remember back in 2021 when Logan Paul and all those people were launching like their own celebrity tokens and they went to zero? Well, that's because once they launched the token, people bought it and they dumped on their head. ZORA is incentivizing good content for the long term because when you initially launch your token, 50% of it is locked for like 4 or 5 years. So you can't just like have people buy your token and dump it all on them. You can buy your token. 50% is allowed to be bought on the open market. The rest is vested over 4 or 5 years. So what that does is, if I want my token to go up and be able to sell it 4 or 5 years down the line, I actually have to create good content so that people will want to buy what I'm offering, right? And then not only that, the problem with Web 2 based content creation is that it takes a while for you to start making money, like posting on Instagram, posting on Facebook. But with ZORA, they make it so that you get a 1% transaction fees from all of the token swaps. Like as soon as I launched my token, I made like someone bought one of my posts. Someone put in like $34 or something for a music video that I had made. And I've already made like $3 and I've made like 3 posts. This is just when I was just testing it out. Like people were buying my token. So yeah, man, I guess I'll kind of start with that if you wanted to chime in on anything.
I'm bullish on ZORA for a couple of reasons. I think it's very prudent. Like when you say you don't want to be trading tokens that you wouldn't want to hold for the long term, or like you wouldn't want those in your portfolio. So when you showed that FU coin, it's like, okay, maybe you can earn 40,000% APR if that turns out to be something, or like it doesn't rug in the next day. But we've seen too many of these pump and dump and these alluring lights, drawing moths to the flame, and you get too close to the flame, you get burnt. But ZORA, I think for me, they are positioning themselves as the Instagram of Web3. Definitely, I'm bullish on the side that creators can start to earn. I do have some reservations about the platform. I do think there needs to be a better way for how to say, like, I feel like the fees are a bit of a gut punch. In fact, yesterday I was talking to Docker, who is and also Creator DAO. They're both investing quite a bit into creators who are creating content on ZORA, supporting them because they believe a rising tide raises all ships, and that ZORA will do well. So whenever since the creator tokens are paired to ZORA, if the ZORA token does well, then naturally that will have a positive impact on the market caps and prices of all the creator coins. The fees are very high. I don't particularly like that, but they have significant investment from Coinbase Ventures. And if nothing else, obviously not financial advice, but just look at the companies that Coinbase Ventures has invested into, and then you'll see a lot of unicorns and a lot of projects that have that staying power because they're base aligned and they have a heavy hitter in their corner. So simply for the reason that Coinbase Ventures is heavily backing ZORA, I believe they will be too big to fail. So I can go to sleep comfortable on my ZORA bags as long as the overall crypto sentiment is bullish.
Yeah, no, that's very important. Even the founders, the two founders both worked at Coinbase, and one of them was like, if I remember correctly, like in charge of like launching tokens. So it makes sense that this guy saw probably thousands of tokens get launched, and he absorbed all that data and came up with this creative way for us to have our own tokens when we create our profile on ZORA. Not only that, anytime you make a post, that post becomes a token and it gets paired with your creator coin. Like, it's crazy. And then so you told me your reserves. My reserve is that, and it's not, I'm not going to really say it's a reserve. I'm actually, when you are investing into a project, the tokenomics is like the most important thing. Well, I'm not going to say the most important thing, but it's one of the most important things, because like a project can be all high and mighty, it can be great, but if the tokenomics are bad, then it will like hold back the price. So before I'm going to save my reservations for last. Another good thing that I liked is that they raise money from a lot of reputable people. They raise money from Juan Ventures, but you really have to also think about the regulatory climate, right? So here in America, we have what's called the Clarity Act, right? The Clarity Act, I think it's just waiting on the Senate to get passed by the Senate. But the Genius Act already got passed, which allows banks to issue their own stable coins. Okay, great. That is basically just another way for them to be able to secretly print money, because how stable coins work is that as soon as one stable coin is created, it's like one stable coin equals $2. So when you go on Coinbase and buy USDC, you get the USDC that you can use to use stuff with, and they have your actual dollar. So $1 equals $2. So it's another way that they're going to print money, and it will cause inflation. And the losers are going to be the people who don't invest, because there always has to be a loser. And that's why DeFi is so important, because you can get a yield that outpaces the inflation rate. Having that said, the Clarity Act separates what tokens are a security and what tokens are a commodity. So now we have a clear framework, but there's a clause in there that allows people to fundraise $50 to $75 million without regulation, just as long as you promise to decentralize over a 4-year period. Guys, this is going to cause everyone and every company is going to be launching their own token. So this could not be the more perfect climate for ZORA. If ZORA was trying to have this platform when the Biden administration was in office, or when Gary Gensler was still the SEC chair, it wouldn't be good. But they're literally, it's like a red carpet is lined out for them so that people can like launch their own tokens, and companies can launch their own tokens. So regulatory climate is also extremely, extremely important. Brian Armstrong has been like ZORA's biggest cheerleader. And I think the Base app is powered by ZORA, or ZORA is powered by the Base app, something like that too. But
ZORA is integrated into the Base app. The Base app is the everything app. And Jesse Pollack was actually very good friends with the founder of ZORA. They were friends back in Coinbase before, I think Jake is his name, before he branched out to do ZORA.
Okay. Yeah. Thanks for clarifying that. So now I want to show my screen, and this is like my only, like I said, I'm not going to call it a reservation, but it is something to be aware of, and that is the tokenomics. So ZORA, they put their article on their support page, and they basically show like who got what tokens, right? 20% went to the community, 10% went for airdrops, 5% is for liquidity. So this is like basically when you go onto a decentralized exchange, having the liquidity to swap, they lock that on there so people can trade, but also everyday people like, myself and Basejunkie can provide our liquidity as well. So that raises it. but they just seed it, right? 20% goes to the treasury, 18% to the team, 26% for the investors. So now when you raise money from investors, they have a fiduciary responsibility to generate returns for their limited partners, right? And typically what happens is they have what's called vesting schedules and cliffs. A cliff, the most common scenario is a 1-year cliff, 4-year vesting. A cliff is the period of time at which you can't even touch your tokens. Investing is how they're unlocked. So if you have like $100 vesting over 4 years, that means every year you're able to unlock $25 and you can sell it or hold on to it. But like I said, they have a fiduciary responsibility. So it's a high likelihood that they're going to take some profits because they got in at a much lower valuation. So as soon as their tokens are unlocked, most of the time they're able to take profits immediately. So you can see who got what. And now if you go on this side, because, you know, sometimes they'll make it confusing. Like they'll say 12 months. It's like, okay, what month are we in right now? So sometimes you got to do some digging. So this site shows like the best tokenomics graph.
Is this a free website that people can check out?
Yep, this is free.
Okay.
Yep, this is free. Crypto Rank, they used to be free. That's a really good one too. And they show you like who they raise money from and all that stuff, but they just started charging. But you know, you can usually find it somewhere else too. Or ChatGPT is also helpful. So for here, we're in September, right? And you can see that September 30th is when the first unlock is going to happen for the investors. And then on Halloween, the treasury is going to start being able to unlock. And it shows you how much: 5 million, 5.3 million to the treasury, 9.3 million to investors. And then the very next month, 13 and 8 million. And then 10 million to the team, right? So every month that goes by is more and more tokens being unlocked. So while I am really, really bullish on ZORA, and I do hold it as a part of my portfolio, just being transparent, it's not as a big of a portion in my portfolio as it would be if it weren't unlocks coming. And the reason why I say that is because, you know, I'm expecting a blow off top here in Q4, Q1, you know, supply and demand, right? For any markets to see or any asset to see an all-time high, two things have to happen simultaneously. You have to have an increase in demand, aka a new pool of buyers entering the market for the first time, because historic demand isn't going to bring prices to new highs. And then simultaneously, you have to have a supply that can't meet that demand. So in this case, if the supply is constantly increasing, you know, demand has to increase that much more. And I'm not saying it's not possible, because one thing that I like is that in order to buy any creator coin, you have to buy ZORA. So people are going to be having to buy ZORA by default. So this is different things that's causing buy pressure. And, you know, it's a really good project. Coinbase is backing it. But you do want to be aware of the tokenomics, because these investors are most likely going to sell as they're being unlocked, especially if markets are green.
That's a very valid and interesting point. As the chart showed, like we haven't hit any of those unlock periods. So we have until the end of the month until
it starts. Yeah,
it starts. By the way, shout out to No One. He
appreciate
recognized
you're someone. You're someone, man. I just want to tell you that you're someone.
Yeah, he's representing. So okay, that's 1-0 on today's drip. But you know, I got the consolation compliment with the blue hat. You know, appreciate you. You're someone. You're someone to me.
Yes, sir.
But yeah. Honestly, it's very interesting to dive deeper into the tokenomics. I think it's something that a lot of people overlook, and that's why I find these conversations quite insightful, because obviously, like the stuff we were talking before about the ZORA and just like explaining what ZORA is, I've had many of those conversations, and lots of people in the base eco are familiar with ZORA. It's kind of been the talk of the town for the past couple months. They've been the belle of the ball. All eyes are on creators and creator earnings and how we can support creators, you and I included. And with platforms like ZORA coming out and Retake and Fireside, where creators can earn from the content they create, depending on the medium, you know, this has been definitely the talk of the town. But the area where you were showing us the tokenomics, it's a very valid point that a lot of people doesn't really enter the conversation, because it's not front page news, and you know, there's so many different things to think about. But at the end of the day, you can't forget the fundamentals. And with a lot of sell pressure looming around the corner, 30th of September, and then Halloween, I mean, that's a lot of sell pressure. So unless we do get unless the market does get frothy, that may even be short-term bearish in terms of price action.
Yeah, let me show you how I look at it. So first off, when I buy any asset or when I go to research any asset, I have a fundamental analysis checklist that my business partner actually helped me create. But I used to do it all in my head. I go through literally everything: the liquidity, the team, what problem they're solving, their competitors. Is this a problem worth solving? Like, is it a hair on fire problem? Partnerships, tokenomics is a big one. And I give everything a score. And whatever projects have the highest, the higher the score, the higher the allocation in the portfolio. And if it's not above a certain score, it doesn't even make it onto the portfolio, but it'll be on the watch list. And then after that, before I buy the thing, I have my take profit strategy set up already. And I'm going to be coming out with a ZORA take profit strategy video sometime this week. You want to have a plan to get out before you get in, and you want to come up with a conservative estimate as to where you think price will hit and an aggressive estimate, and set up your take profit strategy to where even if it doesn't hit the conservative or even if it exceeds the aggressive, you're still able to profit, right? So I'm gonna just share my screen here, and I'm gonna talk about, I'm not gonna go into my take profit strategy because like I said, I am putting a video out on that. So stay tuned for that. It'll be on my Crypto Noah YouTube, but I will just kind of talk about some stuff here. So right now, we have the fully diluted valuation of ZORA at 641 million, and the market cap is 208 million. So the difference between these two is that the FDV, fully diluted valuation, is taken into account all of the tokens. And this is how businesses are evaluated in traditional finance. Like when you're evaluating a stock, you always look at the FDV. The market cap is just taken into account the circulating supply times price. That's the market cap, right? And the disparity between these two is the tokens that are gonna be unlocked that we just looked at. Now, if we go back to this unlock, right? And let's say, so around 10 million is gonna be unlocked. And then the next month you have 9, 10, 11, 12, 13, 14, 15, around.
So are we talking dollars or tokens?
Dollars. You see the dollar sign on the side? Always want to go by dollars. And also, this is dollars at current prices as well, okay? So this thing can change. So we have around $20 million that's getting unlocked over the next like 2 months. Over the next 3 months, you have 10, 23, 33, 32. So 31 million. So you got around like 40, 50 million being unlocked like around the end of the year. Now, not everyone's going to sell. So let's say $40 million is sold. So if you take a $208 million market cap, that goes down to what, like $170 million market cap. So you have to think to yourself, like, okay, if this is a $175 million market cap, do I still think that the demand can outpace that? And my answer is absolutely. So that's why I'm still willing to hold it, because it's not a hell of a whole lot of selling pressure in comparison to what I think the demand is going to be. I definitely think. Go ahead.
Sorry, I don't like to interrupt people when they're on the flow, but the market cap being 208, and then let's say there's $40 million sold, like that $40 million would have more of an impact on the market cap than just down to 170, because I mean, where's that 40 million going to come from? That has to come from the liquidity. Am I right?
No. So typically when like venture capitalists invest into a token, they invest through what's called a SAFT agreement, which stands for Simple Agreement for Future Tokens. So they have actual tokens, and ZORA's already on Coinbase. So they'll probably sell it like to some major centralized exchange like Coinbase. Coinbase Ventures is definitely going to sell on Coinbase so they can make the fees. So it's not going to all come onto the DEX. They try to keep these kinds of things off chain, right? So that people can't see it, because they want to keep the price as high as they can, because they want people to buy their bags at a premium. Does that make sense?
For sure.
So yeah, I think like conservatively, I'll tell you guys what my conservative and aggressive price estimates are for ZORA this cycle. I won't say where I'm buying and selling at though. You'll have to check out the video for that. But conservatively, I think ZORA can reach a $10 billion market cap. Aggressively, which is less likely, I think it can go all the way up to a $25 billion market cap. And if we look at, for a blow off top, that's nothing, right? So just to get to the conservative estimate of 10 billion at current prices, that would put it at number 25 or 20, between 24 and 25, right? And keep in mind, guys, this is these kind of projects like Creator Coin token, kind of projects usually do well in bull markets, right? If you remember Chili and Rally and those types of tokens for last cycle, to get to a $25 billion market cap, and again, it will be number 24 and 25 now, but when we're in a blow off top, Zora's not going to be the only token that's pumping really, really hard. So it would be a lot lower, actually, or I should say higher, going this way, if it were to reach that during a blow off top. In order for it to get to a $25 billion market cap, that would place it right now. It would be at number 12. And again, though, once we have a blow off top, everything's going to be rising. So that is how I'm looking at it.
So a $10 billion valuation from a 200 mil market cap currently, that's a 50x. Now, I think you and I both agree that we're going to have our blow off top Q4, potentially Q1, maybe the beginning of Q1. That feels like a lot. Like
Dude,
a 50x from now?
Bro, it is a lot. And it does feel like a lot because it is. But during these blow off tops, like you have a bullish cycle, then you have like a power cycle. Like if you look at the Shiba chart and the Doge chart and like the projects that appreciated the most, it normally happened with like between a few weeks to a month. Like it's like a then it's like a boom, boom, right? It's not going to stay up there, but it happens every cycle. And I think Zora has a good chance of doing that just because everything that's happened with the Base app, this is Base's full first actual bull market where Base is like a functioning chain, right? Regulation is great. Everything is great. We're about to get a rate cut, probably, right? It's even a 10% chance that people think that we're going to get a 50 basis point cut. I still think we're going to get 25. But dude, like the economic stop S&P and the NASDAQ and the Dow are all at all-time highs. Like we honestly could not ask for a better context. So yeah. But even if it doesn't hit a 50x, even if it does a 10, 20, 30, 40x, like I said, you want to set up your take profit strategy to where you're taking out profits along the way so that like I'm not waiting for it to go to a 50x and then plan on selling, because if it goes to a 40x, I'm not round tripping. So yeah, that's the important thing.
Yeah, honestly, like the round tripping is so painful, and I think we've all been there. But I think once you've been in a few cycles, or once you've tasted the moon and then ridden it all back down to planet Earth, it's just like, oh, never again. So yeah, we learn from our lessons. But hey, let's jump into some charts, because I know people.
Yeah, let's look at your Zora pool. Let's see how pull up your deck screener. Pull up your deck screener and let's see what your ranges are, and let's see how they perform last week.
By the way, I did go out of range on one of them.
Okay, I'm still in mine too. So your Zora USDC is still in range. Go ahead and hit width. Okay, so since this is down, well, okay, now the range is in on this one, huh?
Yeah, I'm not sure what the range was.
Hit price. It's on market cap. There you go. It'll show up now. Yeah. Okay. So
what I'm thinking. So I'm still in range on one of my. I'm still in range of 2 out of my 3 Zora pools. I remember last time I was getting I was chasing the higher yields. So I think the one that went out of range, I did a tighter range. So I can go pull that up. So
pull up your
Aperture. This is the one that we used last week. But
pull up your revert real quick.
Let me see. Okay, so over on my left, we have in range, out of range. It was Zora width, out of range. The minimum was 4 zeros, 14, and max was 4 zeros, 23. And then this one was quite a tighter range, 4 zeros, 15, and 4 zeros, 18. I was really trying to make this one earn as much, like outperform this one. I collected the fees. It was about $7. So overall this week on these 3 positions, we got 4, 8, and 7. So we made just shy of $20. This Zora chart, I got one of mine has gone out of range. I want to set up a really tight range on a different token, which has been rock solid in terms of sideways movement. No, very, very, very little fluctuations. But guys, we want to make sure that we are giving the alpha, sharing the alpha, and sharing the journey. So from the original $1,000, as you can see, let me share my screen. So in fact, I was using Aperture this week. So which platform do you prefer to use, Revert or Aperture?
Both. Revert is just to give you the data on everything. Aperture I just use to rebalance.
Okay. So if I want to change these pools, so here we have the ones that are still in range. No need to rebalance. It looks like these ones are still.
Let's
I mean, how
check the
can we?
yield. Let's check the
Mhm.
yield on Revert really quick. See
All
how
right,
it's
let's
doing.
revert.finance. By the way, did you hear about this hack that happened a couple of days ago?
Yeah, where it like the Dex has said everything was fine, so I was like, oh man. But I did hear about that.
Yeah, like I was on a Monday stream, and we're like, maybe we shouldn't sign any transactions today. What the?
Yeah, all the Dexes that we use in their Discord, they all said that they were fine. So if you guys have got some other random websites that you're connected to, go to revoke.cash and just revoke that cash.
All right, so I'm having a little bit of unresponsive page at the moment. I'll try it again. I think this might be the universe telling me to invest in a better laptop, but laptop money right now is crypto money. I think I want to buy a laptop, a better laptop when
You ever see that meme where it's this guy pointing at himself in the mirror and he's like, you're not broke. You work in Web3.
yeah. I'm that guy pointing in the mirror like, you're not broke, you're pre-rich.
There you go.
That's me. All right, I'm
You're
gonna
not
leave.
broke. You're illiquid. That's
Illiquid. I love it. All right, so unfortunately, Revert Finance is not working for me today.
okay. No worries.
But is there another way to check the the yield on these?
So let me see if it's working for me real quick because my range are similar to yours, and I can just tell you. So my Zora ETH is paying 154% APR,
Mm-hmm.
and then my Zora USDC is paying 98% APR. So
Okay.
still paying out pretty good. But here's something to think about. The market, the volume in all of DeFi has been kind of minuscule. Even like my extremely high paying pools that I'm in, it's died down a little bit. But just like when you're trading, you have bull markets, uptrends, downtrends, and consolidation. This low volume period is kind of similar to what consolidation is when you're trading, right? But remember, we don't know when the best days are going to be. Tomorrow, things could rip up and down, and we can get a ton of volume. So for something like Zora, if we're expecting a 50x, at least for me, if we're expecting a 10 to 50x or whatever the case is, I want to be in range for whenever those days come because there's going to be a few days where most of the volume happen, and that's going to make a huge difference in the performance of your portfolio, right? You never know when the fish are going to hop in the net, and that's why you cast your line out and you just kind of sit and wait until you get a bite, right? The bite is the big volume candles. Also, we have the Federal Open Markets or FOMC meeting on September 17th, and that's when everyone is expecting a rate cut. So the market is kind of like puckering up its little asshole as it's waiting for a decision to be made, right? So I think that's the big reason why volume is kind of down on everything, just because they're waiting to see if we're going to get a rate cut. It's already priced in that a rate cut is going to get in, I think. But that's my thoughts on that.
I think you're absolutely right. I also think that this is actually a good time to be doing some yield farming because if the market's all in a consolidation phase and just moving sideways, yeah, I made $20 this week just on fees. So I mean, hey, that's $20 more than I had. So let's go. But
And if the market does a 10x, that $20 is $200.
that's it. That's it. I am interested in switching it around a bit because
Okay.
okay, so we started with 1,000. At the moment, we're down because the market's been sort of marching a bit down. It's been consolidating. I think now it's around 800 and something bucks. I'm not adding more money to this. I'm not taking money away. I want to enter this
Diversify.
challenge. Well, I want to enter this challenge and keep the numbers, straight, so that
Okay.
we know, I'm not using that decount for other stuff. All right, so we're at like 800. We've come down on the Zora. Now, do you ever exit a position when you're long-term bullish, but just 100% APR is not really like crazy? Earning $20 a week from a bank would be incredible, but from DeFi, it's a little lackluster. What would your advice be here? Because there's another position that I really really want to look into, and I would love to for you to look at what the yield is on this and see whether it's worthwhile. But what do you think? Do you think it's worth cutting the losses on Zora and jumping to greener pastures?
So this is what I think. And I'm gonna take some words from our coach Chris. Shout out to Coach Chris if you're watching this. He talks. And we were on our 49 Weeks to Freedom challenge last week, and I asked him like, man, when he was actually our first customer back in like 2024, and I remember he has like a big beard. He would come on. He came on one day and he's like, yeah, man, I'm just trying to figure this thing out. It's kind of stressed out because I'm in like all these pools. I'm like, Chris, how many pools are you in? And he's like, man, I'm in like 40. I'm like, bro, you need to dial it way back down. And we have this joke where we're just like, I think you secretly want to be in every liquidity pool in all of DeFi. And we always laugh about that. So it's just like, it's multiple ways to skin a cat. I personally believe in putting most of my chips where I'm super convicted. Research breeds conviction, conviction breeds patience, and patience builds wealth. But I remember reading in this book called Market Wizards, where this guy interviewed like all the top investors, and what was one guy's bread and butter is for another guy that's on his list to never do no matter what, right? So having that said, he looks at his DeFi liquidity pools as like a wedding cake. He'll have like his foundational pools at the bottom, Sol USDC, ETH USDC, things like that, maybe Pendle USDC or USDT, and then he'll take the rewards from the pools and put them into more riskier pools, and then he'll take the rewards from those pools and put them in more riskier pools. So he's kind of like building a cake. Now, there is some times where you'll want to get out. Like, so me personally, I'm not getting out of my Zora pool, and I wouldn't recommend it because of how bullish we are on it and because of the volume that we're expecting, right? We don't know when it's going to come. It's kind of like me taking my fish, my line out of a lake when I know I'm gonna get a shark bite. I just don't know when. What would make me exit is if I think that another token. So like for me, I accumulate rewards and I use those rewards to like buy more tokens. And I put the half goes to buy more tokens or stable coins, depending on how my portfolio was weighted at the time when I go to rebalance. Another half is used to buy tokens that I'm bullish on. So I was in an ETH SPX pool for over a year, and that thing was paying on average 200%. When I was in Portugal and I did the presentation for you guys, remember it was paying like 750. Then it went down to around 90% for like over a month. Then I'm like, okay, it's been a month. The thing is already corrected. I had got out when it was already up, and I had told people to put it into another pool that we're in. And I'm just like, okay, I think this project's undervalued. SPX is higher, right? It's already corrected. This project hasn't pumped yet. And right when I got out, the pool I told people to get in had went up 2x, right? It was literally perfect timing. So what would make me get out of pool is if the yield isn't paying what I could get somewhere else for an extended period of time, for a long time. Zora is going to pay triple digit yields for a while, I think, right? People are going to be accumulating it. The more people that find out about it. So if that's the case, I'm going to stay because I'm also thinking about how the price of my rewards can increase as well. However, it's never a bad idea. I'm not going to say never. It could be a good idea also to take some other money, whether if it's from your rewards or somewhere else in your portfolio, maybe take some profits on ETH, right? We're consolidating right now. And then your camera went off. And then use those profits to get into another pool. But since we're doing a case study, I mean, maybe take some out. But if it were me, I would definitely leave some into Zora if we think it's going to be one of the best performers this cycle, and we just have no idea when. And rate cuts are like a week away, possibly. So that's what I would say.
That is food for thought. I think with this $1,000 challenge, I'm ready to risk it for the biscuit. I know maybe this is like flying in the face of like passively just like accumulating, but with the like my goal is to grow this 1K into something that, and then start to use those monies for layering a cake. I am bullish on Zora long term. Bearish on Zora, hearing about the unlocks, that's something that I hadn't really considered, but it's something that I wildly overlooked. I regret overlooking that. But the project I want to look at, and if it's offering good yields, the chart looks fantastic for this purpose, for setting ranges. And I met the team. I met one of the founders in On-Chain Summit, and I was also recommended this project long term from another person who I respect very much. Lots of good insights, and the project is well with big partners. They're extremely well funded. I think that they seeded their initial liquidity pool with like $250,000. I mean, who has that kind of money? But these guys are working with large institutions, with governments. Yeah, they are. It's the token. It's golden. And
The
that's
name
what
of the token is Golden.
gold N.
Okay, I'm gonna pull it up and let's give it a look see and do like a little live little analysis here.
That's it. That's it. Just shy of half a mil volume today.
So okay, so this is the 1 minute chart. I never look at the 1 minute chart. Let's start off with the daily. Okay, now the newer a project is, the less weight technical analysis holds. Just to be frank, right? So it's 7 days. It's been consolidating for only 4 days, right? It's been consolidating for 4 days, and the liquidity is $1 million, but it's not locked liquidity, right? Like for example, if I go to watch this, if I go to SPX, you see how you have this lock around here? That means the liquidity can't be pulled out. So that's another thing you want to look for. Now, so this thing's been locked for 4 days, right? Now, Zora has also been consolidating for probably more days than that. So it's not a lot of days. It just seems like it's a lot of days because it's a newer project. Were you thinking of getting into Zora USD or Zora ETH?
So I was thinking of getting out of Zora and
Or my bad,
USD
golden.
and with
I meant
golden.
golden ETH or golden USDC. Sorry about that.
So yes, when you're saying that newer charts have less weight because there's less fundamental or technical analysis available, I was looking at the 1 hour chart. Just zooming in to sort of see like, okay, what sort of volatility, what sort of traffic is happening, and it looks flat as a board. Just it looks like, my interpretation of the volume is that this is a market maker that's generating these buys and sells. You can see it on the charts. It's not really organic people speculatively buying into the token or selling it. I think these guys are a well-backed team, and I don't want to say I feel overly confident, but like I feel like they have reputations. They're all a docs team with connections, so the chance of rug feels less to me than with undocs teams. I just wonder, because the range is so flat, like so flat, just market making. I wonder, is it possible to capture those fees with a super tight range?
Yes. So it's always possible to capture the fees, right? So this is the, you say you were looking on the 1 hour, yeah?
Yeah, that's the one.
Okay, so what's today? So since September 5th, this thing has been on average in a range of around 10 to 12%. Now, it's definitely possible to capture that range. And just like when you're trading, right? When you're day trading, you're always entering on like the 1 minute or smaller or a little bit larger, the 1 minute, the 10 minute, the 15 minute. If you're day trading, you're scalping. So it's the same thing. If you're scalping, when you're providing liquidity, you want to look at these charts, right? So you just, what I would say is, if you want to get in this and play with this, you're going to want to be checking this thing often. If you're getting into it on like the 1 minute or the 1 hour or less, right? Because it's not a lot of time. because like it doesn't even have a week chart yet, or it just had its first week candle. You know what I mean? Now, so that's what I would say on that. And again, I have no idea what these tokenomics are. I don't know what the vesting and cliff schedules are, if any. I don't know what problem they're solving. And if we go down here and look at the top traders, the top trader only made 37K so far. If we look at the holders, this is pretty good. It's very well distributed. So most of the people hold 88%. So only 10% is held by, and I'm willing to bet that this is the liquidity for the pool, but it's not locked. So keep that in mind. It can be unlocked at any time. So yeah, if you were going to get in this, test it out, man. It's not a bad idea. Test it out. Obviously, we don't have time to do like a full fundamental analysis on the project, but let's just go to there and see what they're doing. So do you know like what they're doing basically?
In a nutshell, what I understand them to be doing is they want to tokenize gold reserves. So their first partner is, in fact, I can't remember what's public. They've partnered with one. I won't say which state, but they've partnered with a state's golden treasury, and they are tokenizing the gold. Part of the mission, I think, is to like if you have gold reserves in one country and you want to transfer your gold to another country, i.e., if you have Ukrainian gold and you want to have your gold in Dubai, you can then just do it as a transfer, and then all these gold tokens are backed by physical gold.
Okay. So here's their tokenomics here. 5% went to liquidity, 5% to NFTs. I'm guessing those NFTs is for like the tokenization. 20% to the treasury, 25% to the community. Core contributors is another word for investors. Central exchange market making 10%. Early backers, also investors, 15%. So 18, 28, 29, 30, 31, 32, 33% went to investors, which can be sold. Just don't know like their vesting schedule and all that. And then 20% to the treasury. So 53% is in the hands of the team in the treasury. So that's important to be aware of. So 50% can be sold. Just don't know when. So if they're all unlocked immediately, you got 50% that can just be dumped at any time. But if we look at this, the market cap's only 18 million. So that's only $9 million of potential selling pressure. And if they're doing what you say you're doing and they have backers, this seems like it can be actually a pretty good project, actually. I'm going to actually dive into this one. Might make a video on it.
I think it'd be worth. I mean, whether you make a video or not, like I think it's worth looking into, because the person who told me about this, he has more information. Like some stuff maybe I haven't kept up to date on everything that they've shared publicly or not publicly. I shot a short interview with one of the founders at On-Chain Summit, and he said, "Can you not publish this yet because we have some things coming out?" And then the person who I respect, he was saying like he thinks this is going to be one of the big tokens this cycle. So obviously not financial advice.
No, I mean at the very least it's an $18 million market cap. It's pretty small. So
I mean 18 million, and I think that's with very little sort of like this isn't like a hot meta or anything. This is just, I think this is just them launching, getting their backers in, and then they're going to start making more connections and more of a push. So I saw the liquidity was on Uniswap. Last time
Yep.
we entered a pool on Aerodrome. So if I did want to set up a tight V3 pool on this, would I need to go onto the Uniswap and then?
Yep. So you set your range first. Like if I were to hop in this pool, I would, and I want to do a tight range, I would do around 25, because I doubt it's just gonna. Well, I'm not gonna say that. It could keep consolidating, but normally these things kind of go down. Or I have no idea actually. So I'm not even gonna say anything. But if you want to do a tight range, this would be a good one because it kind of gives it room to breathe, and this is kind of where the chart has been lately. And then if you hop in it, we can look at it next week. But you go to Uniswap and then you type in the token, and then you go here and you can hit pool, right? And this is, so you see this one has the TBL, the 1 million. This is the one that we were looking at on Dex Screener. The rest don't have any TBL. It's also good because it's a 1% fee tier. It gives you the pool APR of 145% on average, but if you have a tight range, chances are you're going to be able to make more than that. So, like if we click on this, the TBL right now is 1 million. And the volume has been kind of consistent lately. No, this is this the volume? Yeah, this is the volume for the past day. This is just the past day. That's
those
weird.
yeah, those are hour candles.
Yeah. So we're gonna look at 1 month candles, or let's look at 1 week candles. So we had they showed the fees here. The volume was around 100K, 200K. This is like the volume here on the side. So I mean, shoot, man. I say go for it.
All right, man. Well, I think I'm going to do that.
You should, man. And thanks for bringing this to my attention. I'm gonna look into this. It seems like a pretty interesting project.
I mean, if it's paying out, close to $1,000 a day in fees, and it's been consolidating at quite a tight range. I mean, 15%, and that's with room to breathe. I mean, I would be interested to see how we go over the next 7 days.
I might fuck around and toss a little bit in there too.
All right, man. Let's do it. Well, dude, let's put a nice ribbon on this. I think we have a tendency to go comfortably past the hour because there's so much to talk about. There's always new things happening in crypto, new opportunities, new pools. So I want to close the ZORA WETH pool that's out of range. That's $170, and
If anything, I would keep the ZORA WETH pool and close the USDC one.
Yeah.
If it were up to me, it's paying higher, and it'll be easier to stay in range, and you're holding some ETH exposure. So if they both go up, you make a little capital gains too.
Okay. Yeah. You know what? So that's I'm going to do that. So that's so I think I'll be moving about $400 towards this new golden WETH pool, and yeah, hopefully we have another sideways week. Obviously, is it tomorrow is the big day?
For what, rate cut?
Yeah.
No. We got a week, 17th. So on our next show, we'll have a decision.
Okay, and then that's when things are gonna go shoot up or shoot down. But yeah, I mean, hopefully we got another 7 days of sideways market, and we can reap some rewards from this 7 day yield.
Yeah, I want to find out like how that token gets value because they're tokenizing gold. So like, what is the token for? And then also, the riskier the pool, because it is a risky pool. The project just came out. It's a small market cap. The riskier the pool, the smaller amount you should put in there. Like that's like the top of your cake, that kind of pool. So you don't want to make the top of your cake bigger because it'll fall on the rest and you have to start over kind of thing. So if it were me and I'm playing with 1,000, I would maybe put like $200 in that thing. But I know we're doing an experiment, but I'm just telling everyone like my principles. But obviously, if we make a mistake, it'll be good to talk about it. So still good.
Good content. So there's some value drawn either way. All right, mate. Well, look, let's put a nice bow on this. I want to say a big thank you to the 150 people who tuned in today. No one, you're someone to us. Thank you for retweeting the space and giving us some flowers for our fashion sense.
Guys, mention BASE in the comment. Everybody mention BASE. Let them know that we're out here doing the Lord's work for them.
That's it. You know, I'm actually going to base camp this Sunday, so I'm gonna be like, yo, you need to check out my man Noah, because bring in the heat, bring in the alpha, enjoying the conversation. So yeah, once again, thank you Noah for your time. Thank you for sharing your insights. Do you have any calls to action as we wrap this up?
Hey, follow me on YouTube. Subscribe, Crypto Noah. Subscribe to Know What Else. Join our free community. We would love to make money alongside of all of you guys, along with all of our other students. Retweet this thing so we can get the word out to Base, so they can sponsor us. And yeah, just keep showing up, and we appreciate you guys. And we will see y'all next week to touch base again with some more fresh merch.
Fresh merch is a must. All right, guys. Yes, thank you everybody who tuned in. We will see you next week as we get updates on this $1,000 challenge, zero to hero. I'm following Noah's guidance, and today I'm going to risk it for the biscuit with this golden pool. But anyway, until next time, stay safe, stay healthy, but most importantly, stay based.